Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good long Labor Day weekend. Today's Tuesday, and as we come to the market this morning, market gap down. Currently, market at close, S&P is down 2.73%. I think Nasdaq is down close to 5% there. So Nasdaq continues to get hammered. The last several days, we've been seeing some 5%ers on the Nasdaq. I think overall Nasdaq is suffering about 11% decline since the peak. However, the S&P is suffering a 7% decline from the peak after making about 60% from the March lows. So 6% after such a long bullish rally, I really don't find this as like something too dramatic. So I actually think this isn't bad when it comes in the long term, but we are gonna be getting into some hectic environment going into next several weeks, probably the entire month of September. And if you've been watching my videos and follow me on Twitter at 2K Kim, we've been talking about how back in here, that this is time to be fearful when others are greedy, and this is time to start. And you guys, if you guys have been following my weekend videos, also talking about how to adjust your portfolio, how to manage your portfolio, how do you navigate this market when the market gets extended. And the main point from those videos were, you want to start closing out your aggressive longs. Definitely you want to get out of your exotics. And when I say exotics, I mean like call options, I mean like triple shares and things like that. And it also some of the stocks that has gone up straight up. I mean, Tesla's suffering about 31% decline, 31 in 3 days. Apple是suffering about 20% in several days since the peak. So there's certain stocks, I think Overstock is suffering like some 50% some crazy amounts. So there are some stocks that has just gone straight up, and some of those stocks you really want to take some good profit there. Unless you're super long term and you're willing to buy these dips, that's totally cool. But I think it you know what I mean, when the stock, especially when the stock goes straight up, just vertically, right? And we've seen some of those stocks like OSTK, Tesla, Apple, Square, Spotify, and some of the other ones also. And maybe and we talked about in some of those videos that how to navigate this market video, that it might be a good idea to maybe not completely close everything out. If you are long-term bullish, it's good to maybe take some off so that when the market do pull back, you have some firing power to potentially add more on the dips. And I actually wrote an article, what are some of the levels that I'm looking for? What are some of the levels that I'm looking to potentially buy? And I guess we can talk about that real quick here. So if you just go to twotradersclub.com, the levels I'm looking to accumulate again, and you can go ahead and look at that here and kind of read through what I was saying, because I don't want to spend too much time on this video talking about this. But some of these levels that I'm looking at here on the S&P and also the Nasdaq and the diamond, right? So and one thing that I want to say is market is really savvy, insidiously savvy, insidiously clever. And one thing I've learned about this market is that this market always it likes to bounce either early or late. It's never going to find a support in a perfect level where everybody's looking at it. It does happen rarely, but a lot of times it's going to either bounce early because there's so many people are actually, I think, waiting for that steep decline. Most people who might have missed out this entire rally, maybe even the bears who've been bearish this entire time, now they're finally realizing this market might resume back up to primary term uptrend. Maybe some of those people who closed out a lot of their longs or maybe liquidated their portfolio in March lows, They want to maybe gather back some of the funds and then, put that into work, potentially buying these dips. So I think right now, psychologically speaking, a lot of people are looking to see some steep declines so they can kind of load up in the market. And I think market knows that, and what market knows that market is going to do two things. One, either it's going to bounce early, right? Or it's going to bounce late. And so that's why there's such a big level here. Late meaning it's going to pull back much further than what most people expect to create panic, create fear environment again. It's been in that complacency. I've been talking about how this market has been conditioned in complacency this whole time, right? And so, because it felt as though this market couldn't pull back. And this is where people start talking about stocks only go up and things like that, right? And this is why you want to be fearful when others are greedy. And also, I talk a lot about that market loves to chase, or market loves to punishes the chasers and rewards the risk takers. So any people who chase it up here, at the top might have, and you'd be surprised. You think that, well, okay, who's gonna chase it up here? Maybe you're smart enough to not to chase it up there. Maybe you're smart enough to, take profits up here. But you'd be surprised how a lot of these people, especially nowadays with their Robinhood account, because I hear things, from my friends and stuff like that, I remember just last couple of weeks, people were talking about, they want to buy Apple, they want to buy Tesla, they want to buy, Amazon and things like that. So people were buying it up there. And a lot of these people never invested in the market this year, last year, never did, or might have been long in the market before, got scared in March lows, kind of watching it this entire time. S&P makes new all-time high. You see some of these, stocks, breaking out, and there's split, happening on the Apple and Tesla. And so I remember people talking about they want to buy it. And then my uncle called me one day. It's like, oh, you think I should buy Apple? I was like, no, you don't want to buy Apple here. Well, because the split is going to happen. What is that? No, so that's there are people. And so there's the kind of excessive buying up here, especially in the large tech stocks, and I think that's why tech got hit harder. As you can see, tech's close to 5% now since you can see the tech is actually getting pretty sharp decline here now, hitting my midterm moving average though. But here, let's stick with our 65-minute here. Go to Spider and trying to figure out what we can expect. So one thing I realized today, and we talked about yesterday, is the fact that there was a moving average of clusters, and I've compared this price action to what? To June lows. I specifically talked about this here and giving you the scenario. Remember I talked about on the last Friday night's video, gave you two scenarios for the week, and you can see how here back in early June here, we did see that plunge. We initially bounced back up. Look at that short-term moving average and mid-term moving average right here. This is what we talked about on Friday. And we pulled back, made lower lows here. And let's go back here. What's happening right now? Interesting thing is happening here. We did see price getting back up, just right to my mid to short-term moving average, similar to that June scenario. We gapped down and made lower low yet again, right? So this is why important to kind of keep an eye on some of the scenarios what happened before. And another thing I thought it was interesting, first of all, we are at my long-term moving average for the first time since late June. In late June, that was indeed a bottom. We went from 300 to 360. That was quite a bit of run, right? So this moving average does have some resume. The problem is we gapped down today. Bears have formed two gaps. You guys know that I track gaps. That's a down gap, another down gap. That's a pretty sizable gap. We have a midterm moving average declining now. So at this point, I do have to give benefit of the doubt to the bears. So I am bearish in the short term. I am neutral to bearish in the midterm as of today. I don't want to quite give bearish yet because we are still holding above my long-term moving average, and my long-term average is still rising as of now. So you can see we do see a decline on my midterm moving average, but we kind of saw something like that here also. We were slightly declining there, slightly declining here. You see that? So I can't quite give completely bearish annotation or label this as bearish in the midterm yet, because I don't know if this midterm moving average is going to start moving sideways like that and we see something like what we saw in June and July. So let's label it bearish in the short term, kind of neutral to slightly bearish on the midterm, but obviously still bullish in the long term. We can say this low is higher or lower. So this low is higher than this low, and this low is higher than this low. So we still have higher lows and higher highs. As you can see, we're just hitting my long-term moving average. The question is, are we going to find support in that vicinity? Let's see what our oscillator is telling us. So oscillator is telling us here. So we have something kind of similar to what we saw actually late June. So what happening right now is we can see we made a lower low right there. We made a lower low right here. We made slightly higher low here. We don't know yet. So for this to play out, I'll extend this so you can see here. Look at that. Look at this there. So for this to play out, we need to see a bounce tomorrow, at least entire day tomorrow, and needs to go up and fill this gap or something like that. If we don't see a bounce tomorrow, things can get hectic and we're not gonna see the bullish divergence like it had here in late June. So I'll let you guys go with this. So here is my take. Nobody knows if we're gonna see a bounce tomorrow. I do not know if we're gonna see a bounce tomorrow. Nobody does. So going into tomorrow, we will have to be bearish. Our sentiment going into tomorrow is still bearish in the short term. Neutral to slightly bearish in the midterm. Bullish in the long term. As you understand that sentiment going into tomorrow, know that we are hitting that oversold level on my oscillator, potentially bullish divergence like June. We don't have a confirmation as of today. For this to be fully confirmed, the price needs to get above my midterm moving average like here. You see that moving average? Midterm moving average back in late June after this bullish divergence, the price needs to get above that midterm moving average and stay above it, then potentially we can continue to grind higher with some volatilities. But the problem is this gap is going to make things difficult for the buyers unless buyers kind of gonna get up there and gap it up above it. So things are not gonna be too easy tomorrow or this week unless we see a shenanigan up move. Only way bulls can save themselves right now is some kind of shenanigan up move, fill the gap above it, reclaim midterm moving average. Until then, it's going to be hectic environment below my midterm moving average, below that gap area until it gets filled. So I'll come back for you guys tomorrow. Go from there. Enjoy your evening. Good luck trading tomorrow.